Good morning, everybody, and welcome to Taxback International's quarterly webinar series for Q3. My name is Katie Kerwin. I'm from the Taxback International Marketing Department, and I'm going to be moderating the webinar for you all today. So we're delighted to see some repeat attendees on the guest list today, and also a couple of new faces. The webinar this quarter is going to focus on VAT compliance. More specifically, the obligations faced by businesses selling their goods via the Amazon platform using FBA. The running time of today's webinar will be approximately 15 minutes, and we're going to be taking some questions throughout, which we'll do our best to get through afterwards. As you can see, you can enter the questions on the right-hand side of your screen, and we'll get through them. If we don't get to your question before the end of the webinar, we'll get back to you individually afterwards. Our speaker today is David O'Leary from Taxback International. David is our Senior VAT Manager with over 10 years of expert experience in indirect taxes and VAT compliance. He's going to be sharing his knowledge and opinion with you all on the topic of distance selling today. So over to you, David.
Thanks very much, Katie. Welcome to everybody here on the webinar. As Katie introduced, we are focusing on VAT compliance this quarter, and in particular, Amazon sellers, as we have a lot of clients that have come to us brand new, and some of our existing client base. One of the areas that they wanted us to kind of have a high-level chat on was the nightmare that is caused really by selling on Amazon, fulfillment by Amazon. One of the main reasons for this is because the fulfillment by Amazon takes away the control of the shipment from the seller, and it's fulfilled by Amazon's network. So this webinar will be kept to about 10-15 minutes in terms of going through the high levels, and we'll save the questions for the end as well. As Katie mentioned, the box on the right-hand side, you should be able to enter those questions. The webinar is aimed at businesses selling their goods via the Amazon website in particular, and those using the fulfillment by Amazon as well, though you'll see some kind of common threads in terms of distance sellers anyway, and also just VAT compliance at a high level as well. The main focus on this really is the risks associated with non-compliance will become an underlying theme of the presentation, and the costs of not being compliant, of ignoring your obligation, or just ploughing on and hoping that everything will be fine. So the first kind of port of call really for us is like, are you breaching international VAT legislation as a distance seller or selling on the Amazon website? And if you're registered, let's say already for VAT in the UK, for argument's sake, and you're selling goods all over Europe, there's a chance that you are breaching international VAT legislation. And one of the main reasons for this would be if you're selling from amazon.co.uk, you are likely selling goods into the Irish market as well. And as soon as you sell €35,000 worth of goods, you are obliged to register an account for Irish VAT. And the onus is on you to know that, not on the Irish tax authorities, for example. So that's what we'll be focusing on here. That if you're selling goods in an Amazon warehouse, such as the UK, France, Germany, you need to be aware of the VAT requirements in those countries, because it's not Amazon's job to do so. It's not the tax authority's job. It is your job to do so. And that's what Taxback International are on the Amazon Provider Solutions Network. We have been vetted by Amazon as best-in-class VAT providers, and we're recommended and available on a list of external tax advisors for Amazon sellers to get in touch with ourselves, and we can help advise the VAT requirements for your business. So if you're selling across borders, you must register for VAT in each country where you're making sales to private individuals and exceeding the threshold. This is actually not just where you're selling on the Amazon website, but if you're selling off your own platform or other platforms such as eBay or Etsy, etc., it's your bottom line sales in each country that you need to take into consideration. So perhaps you're only selling €10,000 worth of goods into Ireland from Amazon, selling another 5,000 off your own website, and maybe another 10,000, 15,000 off other platforms. You need to take that bottom line number into consideration. So just to go a bit more into distance selling is basically you are in one European Union country. I've picked on the UK, and I'll stick with that. And you're selling goods into Ireland and to France from that location. You're allowed to avoid registering for VAT up to a certain amount. And the reason for that is that if you're selling under the threshold, you're not a major economic entity in that country. So there's no need to put the extra administrative burden on you there, and you're charging VAT in your home country is fine. But once you reach a certain threshold, you are now a sizable taxpayer. So in Ireland, for example, that value is €35,000, where the Irish Revenue has said from that sale onwards, you are actually making significant sales in Ireland that we want to account for VAT in this country instead of in the UK. Now, you don't have a presence in Ireland, bar the fact that you're shipping goods in there, and that's what we mean by distance selling. You're selling from a distance. One of the kind of client makeups that we have is we have a lot of US and Chinese businesses that are coming into Europe, and they're not making distance sales in terms of VAT, but they're importing into the European Union first. So in the UK, they're bringing their goods in, let's say shoes from the US, they're paying import VAT and importation, and then they will be selling domestically. They're required to register for VAT from the very first sale, and then that becomes their EU base. So from the warehouse in the UK, they then sell into Ireland and France and Germany, for example, and then they have to watch those thresholds on a distance selling basis. And if you're in an EU business already, you just use your home country where you have your VAT registration, and then you watch your thresholds for the other countries as well. One of the services we provide at Taxback is that we do threshold monitoring. So if we are given your revenue figures, we're able to kind of highlight to you that you have a registration obligation in Spain coming up, and we can have you registered just on time or ahead of time as needs be. So on a shipment overview basis, there's a number of scenarios that these small and medium Amazon sellers or distance sellers kind of do. We ship goods all over the world, and it's really about getting the goods to the customer without considering the VAT implication. So there's a number of kind of obvious scenarios from a logistics perspective when it comes to customs borders. And that is from outside the EU to the EU is a very obvious one, the US and China, or even Switzerland into the EU. You have another EU country to another EU country, UK to Ireland, UK to France, for example. One EU country to the same EU country, that's like the UK to the UK. And then you might have goods in the UK that you want to send to Norway, Switzerland, or the US. That's another shipment type as well. All of those have an impact for VAT. And this is where a lot of our sellers who might be small and medium in particular don't have the resources to understand or be aware of the different legal requirements of them to report this VAT. Import VAT is the first example that we gave. You're bringing in your goods from the United States into the UK. You're going to pay 20% UK VAT most likely. And it's a case of that's a business cost, you want to recover it. In order to recover it, you have to register for VAT. And part of that process is asking, well, why are you registering for VAT? It's because you're selling. So then the next impacts come into play here. You have intra-community VAT, which is a type of VAT for B2B sales. So you might be selling it, your goods actually not to the customer itself, but you might sell to Amazon, and you might sell it from the UK to their German warehouse. So then you would be using an intra-community VAT, and there's an obligation there to provide VAT invoicing and correct VAT reporting. And also you can recover your import VAT in that return as well. You'll also have distance sales in this scenario, which is where you're selling to a private individual, not in the same country as you. So an example, an Irish customer has now bought those shoes from your UK import location, and you can do those sales with UK VAT up until the threshold of 35,000. Then you have the same country domestic VAT. You've brought in those shoes from the US and you're selling them locally. You have to make sure that you charge 20% UK VAT, collect that from your customer, and pay that VAT over to the UK tax office by the required deadlines. And this is something that we see that a lot of clients have. The biggest call for help is the actual issuing of correct invoices, getting correct paperwork from customs, and filing on-time VAT declarations. And we provide a especially low discounted rate of up to 72% of our standard pricing for Amazon sellers. And the final scenario that I just mentioned here is just export VAT. You might have excess stock in the UK, for example, you want to send it back to another warehouse, or you might have, as you mentioned there, a sale to Norway or Switzerland in Europe, and then you're reporting the sale at 0% export VAT, and this trips up a lot of clients as well. They say that there's no VAT on it. Why am I having to issue this paperwork or make a report? You need to show the tax authority that you actually have stock coming in and stock going out. Even though the VAT rate might be 0%, it's still a reportable VAT rate. So I've given a number of examples really on the kind of cross-border selling, and here's kind of what I wanted to kind of go into a bit more detail on the UK and Ireland, which we might probably talk about Brexit a little bit later on. But the first kind of point is Amazon.co.uk, for example, would use the Irish and UK market. So a lot of people in Ireland will be ordering from Amazon.co.uk, and a lot of goods then would come over from one country to another, two different tax jurisdictions, even though Amazon treats it as one. And you can absolutely sell from Amazon.co.uk to Ireland using the UK VAT rate up until you hit €35,000, and then you must register in Ireland. It is not up to the tax authority to identify this or Amazon, it's up to yourselves, and then that's what Taxback can help monitor and advise with the registration process and the filing of correct paperwork and returns. So I've gone straight through at a very, very high level because I know we've got a couple of questions that have come in ahead of registration that I think we might spend a bit more time on. But one of the kind of points that I would need to watch specifically is that you need to monitor your sales flow and your sales value. The sales flow being what countries are being touched by the goods: UK, Ireland, Norway, Switzerland, China, and the value of those goods, the actual sales value, not customs value, and basically watching out for those thresholds. These thresholds can be monitored by ourselves if we are watching your revenue for you, and also that it's a mandatory registration and you don't want to be caught in a backdated situation because interest and penalties will apply. So definitely watch where the goods are going to be held and where they're going to be sold, because the Amazon fulfillment buy system, they will hold your goods in your name in places like Germany, Czech Republic, Spain, and France. And unless you tell them that not to do that, you're likely going to find yourself having obligations in those countries very quickly. And that's why you need to watch where the goods are held as well as sold. One of the kind of final points would be is the emphasis on this. Most of you will probably see in the news, the likes of Amazon, Facebook, and Apple in the news for corporate tax and VAT. The tax authorities themselves are getting very tech savvy. It's now a case that the bad returns or clients that are not tax compliant are actually thrown up to them by the system, rather than the old days where they had to go through paperwork and try and find incompliancy. The 2015 European Commission estimated €120 billion worth of VAT is under-declared each year. Now that's about 15-20% of the total VAT take, they estimate. So 120 billion, they estimate, is not being reported. 40 billion of that, they believe, is down to outright fraud, and 80 billion, which is a much bigger side of this, is just down to bad administration. And this is down to the likes of distant sellers, for example, not being aware of their obligations and charging UK VAT when they should be charging French VAT, for example. And it is an area of increased focus because the 80 billion is a much easier part of the underdeclared value to find than the fraud. The systems are able to show that the French can talk to the UK government and check the systems on the VAT information exchange system. And it's much easier to find badly administrated VAT than it was before. And that's why we find a lot more clients coming in talking to us about this. Okay, Katie, I'll hand it back to you there. I've kind of gone through the high level. Do you want to take us into some questions?
Yep, thanks a million, David, for sharing those insights with us. So as you mentioned, we had a couple of questions come in prior to the webinar starting. So we'll get through a couple of those, and if anybody else has any other questions that they want to address, you can pop those into the question there now. So the first question for you, David, James had asked, what impact will Brexit have on this?
Okay, thanks very much, James. The impact of Brexit has come up quite a bit, and the main impact of Brexit will be that there's no impact immediately. Brexit is pretty much focused on the separation of the UK from the European Union, and that's got an awful lot of legal negotiation that has to happen before it even gets to the VAT Act. Presently, the UK has transposed the EU VAT directive, so it's adopting all the EU rules, and it has 2 years before any of those rules will change. Now, when that rule changes, all it means is that the UK government is free to make changes to its VAT Act. That doesn't have to be in keeping with the European Union. So we don't anticipate there to be any changes in terms of the VAT Act. One of the things that we do expect to see is that we'll now start to see customs duties, which we haven't seen for quite some time in the UK. So the price of goods is estimated to increase about maybe 6 to 10%, depending on what duty applies to a good. And of course, that impacts the amount of VAT, but not the percentage of VAT.
That's great, David. So the next question was coming in from Laura. So Laura sells on other platforms as well as Amazon. What impact will that have?
Thanks, Laura. Yeah, I touched on that in the presentation there as well, and it's a very important point to highlight that all of the platforms, not just Amazon, has to be taken into consideration here. Yes, the tax authorities have been singling out Amazon in particular as the single largest platform, for example, in the UK, but it's the bottom line. So, for example, we've got some clients up here on display. We've got mixedgarage.com, for example. We know that they have their own website where they sell direct themselves. They'll also sell on Amazon, and it's actually the bottom line of those two systems that we would take into consideration for their VAT compliance. In both cases, they have to issue VAT invoices, and they have to watch where their goods are being held and sold. So it's the bottom line of the total sales that have to take into consideration, Laura.
Okay, and then I think the final question for today is coming in from Deirdre. It's in relation to the one-stop shop. So isn't there already a one-stop shop?
Great, thanks Deirdre for that question. There is a one-stop shop. What this basically means is that you don't have to register in all of the EU countries. The European Union rolled this out a few years ago in relation to telecommunications, broadcasting and electronic services such as digital downloads. And what this allowed was, it's called a mini one-stop shop. So you could register for VAT in the UK and account for VAT all across the European Union without registering in Ireland, France and Germany. However, that does not apply to goods, and the one-stop shop that is in discussions to be brought in is not yet available. The EU Commission is looking at the VAT report, where they do hope to bring out a one-stop shop, which means that in the future they do envisage that if you are a French seller, you can register for your entire European Union VAT registration obligation in France, and that the French tax office would collect that VAT from you, and they will distribute that to Ireland and Germany, etc. But at the moment, there is no one-stop shop available for sale of goods.
Okay, that's great, David. Thank you. So that's as many questions as we're going to get through for today. There was a couple of questions there that we haven't been able to address yet. So for those questions, we're going to reach out to you directly after the webinar. As always, we're very interested to get your feedback and suggestions. So if after the webinar you'd like to pop me through an email with any topics that you'd like to see featured for future webinars, we'd be delighted to receive them. Thank you all for attending. We hope that you found the webinar valuable and that you'll join us again next quarter when the focus will shift back to VAT recovery. Thank you.
Thank you.